Have you ever looked at the stock market and just wondered, who is actually in charge here? Who's calling the shots? Well, it's not just one group. It's a massive, complex game with 5 key players. We're talking about the founders of the companies, giant global funds, our own local financial powerhouses, super wealthy individuals, and, of course, millions of investors just like you and me. Today, we're going to break down exactly who they are and how they really run the show. So that's the big question, right? Who really pulls the levers? Is it the massive international funds with trillions of dollars, the founders who built these companies from nothing? Or maybe, just maybe, it's the combined force of millions of small investors. Let's peel back the curtain and find out, starting right at the heart of any company. First up, we have the promoters. Now, you can think of these guys as the original architects. They're the founders, the ones who had the vision and built the company from the ground up. They know it better than anyone. They are the ultimate insiders. So what exactly is a promoter? Simple. They're the original owners, maybe the founding family. But here's the crucial part. They usually hold a huge chunk of the company's shares. And that ownership gives them immense power to control the big strategic decisions. Because they're on the inside, everything they do sends a powerful signal to the market. If you see them holding on to a huge chunk of their shares, that screams confidence. They believe in their own company's future. But if they start selling off their shares consistently, that's a major red flag. And if they start pledging their shares, basically using them as collateral for a loan, that's a huge risk that every smart investor keeps a close eye on. Let's look at 2 sides of the coin here. On one hand, you have someone like Mukesh Ambani. The Ambani family's consistently high promoter holding and reliance shows an unshakable belief in their own company. It's the ultimate sign of confidence. Then you have the cautionary tale of Kingfisher Airlines. A falling promoter stake and pledged shares were some of the first warning signs before the entire company came crashing down. Okay, so from the company's inner circle, let's zoom out and look at the global giants, FIIs. That stands for Foreign Institutional Investors. These are the heavy hitters, bringing in massive amounts of international money that can literally move our markets. Now, an FI isn't just some random person investing from another country. No. We're talking about colossal firms, names you might have heard of, like BlackRock or Vanguard. And they don't invest in lakhs, they invest in thousands of crores. They pour unbelievable sums of money into markets like ours. So why do they matter so much? It's all about scale. The sheer volume of their buying and selling can single-handedly push the entire market up or down. Think back to the bull run of 2021. That was largely fueled by FII buying. And the crash in 2020? Yep, FII selling played a huge part. They're very sensitive to what's happening globally and usually stick to the biggest, safest companies. But here's where it gets interesting. For every action, there's a reaction. And that brings us to our local heroes, the DIIs, or domestic institutional investors. You can think of them as the market's shock absorbers. So where does all this DIY money come from? Well, it's actually our money. It's the collective cash from all of us. That SIP you have going every month, your insurance payments, your pension fund contributions, all of it gets pooled together by huge Indian institutions like LIC or SBI Mutual Fund, and they invest it right back into our own market. And their role is absolutely crucial. They are the stabilizing force. Very often when the FIIs get spooked by something happening in the US and start selling everything, the DIIs step in and start buying. They provide a cushion. A perfect example was during the Adani crisis in early 2023. DII buying helped prevent a much bigger market crash. And if you want to see this in action, just look at this chart. This tells an incredible story. In 2022, FIIs pulled a mind-boggling 2.5 lakh crore rupees out of the Indian market. In the old days, that would have caused a total collapse. But look what happened. DIIs pumped in 2.8 lakh crore, more than absorbing the entire FII sell-off. It was a massive financial tug-of-war. Okay, we've talked about the insiders and the giant institutions. But what about us? Where do we fit into this whole puzzle? Well, let's talk about the crowd. Let's talk about retail investors. That's you, and that's me. A retail investor is just a regular person investing their own money. You know, we might not be moving thousands of crores with a single click, but we're out here participating in the market, often right from our phones, one trade at a time. We have our own unique traits, right? We invest with smaller amounts of capital, and let's be honest, our decisions can sometimes be driven by news, hype, or even fear.
I mean, the Paytm IPO was a really tough lesson for a lot of retail investors. But our biggest strength? It's our numbers. The steady, consistent flow of money from millions of monthly SIPs has become a seriously powerful force in the market.
All right, that brings us to our fifth and final player, the big fish, the market whales. We're talking about HNIs, or high net worth individuals. You'll often hear them called the smart money. So what separates an HNI from an institution? They're still individuals, but they're investing crores of their own personal money. And because they have so much firepower, they can make a massive impact, especially in the mid-cap and small-cap stocks that the giant institutions sometimes ignore. And you absolutely cannot talk about HNIs without mentioning the legend, the late Rakesh Tundunala. He saw the potential in a company like Titan way back when it was still a relatively small, undiscovered gem. His huge early bet turned into a fortune worth thousands of crores. That is the power of an HNI, spotting a future giant before anyone else does. So let's do a quick recap. The promoters have inside control, so you gotta watch their shareholding pattern. The FIIs drive the overall market direction, so keep an eye on global news. The DIIs provide that crucial stability, especially when FIIs are selling. We, the retail investors, have collective power through our SIPs. And finally, the HNIs make those smart, early bets that can really move the smaller stocks. Each player has their own superpower and their own key signal to watch. And there you have it, the 5 key players who are constantly shaping the stock market. Each one has a different strategy, a different motivation, and a different kind of power. So the only question left is, now that you know who they are and how they operate, how are you going to play the game? Thanks for tuning in.